Takeda ORZEYFUL approval. Is the 10% growth real?
My view, the approval is real, but the growth is mostly currency.
What is the short answer for a US investor?
Pipeline validation. Yes. A US earnings turn. Not yet.
Start with Takeda's first quarter headline.
Revenue reached 1.2199 trillion yen, up 10.2% reported.
10% sounds like a clean growth quarter.
Not after removing exchange rate translation.
What happened on a constant currency basis?
Revenue declined 0.5% at constant exchange rates.
So how large is the translation gap?
The deterministic gap is 10.7 percentage points.
Wait, that is headline growth minus the underlying rate?
Put simply, 10.2% minus negative 0.5% equals 10.7 points.
Why should an American investor care about yen math?
Because the United States is Takeda's largest revenue region.
Did US revenue grow in the quarter?
Reported US revenue rose 4.1% to 568.9 billion yen.
Then why are you still cautious?
At constant currency, US revenue fell 5.2%.
How wide is that US translation gap?
In short, it is 9.3 points. 4.1% minus negative 5.2%.
And how much of Takeda depends on the United States?
About 46.6% of Q1 revenue came from the United States.
Show me that calculation in plain English.
In plain English, divide 568.9 billion by 1.2199 trillion.
How do we know this is the fresh official quarter?
Takeda filed the results with the SEC on July 30th, 2026.
What does the profit line add?
Reported operating profit was 201.4 billion yen.
And the core number Takeda highlights?
Core operating profit was 358.9 billion yen.
Now bring in the ORZEYFUL approval.
The US FDA approved it for adults with narcolepsy type 1.
Why is that strategically important?
It validates Takeda's first-in-class orexin program in the US.
Does approval mean prescriptions start immediately?
No. DEA scheduling must finish before US availability.
What timing did Takeda give?
It expects the controlled substance review within 90 days.
So is this already inside the annual earnings forecast?
Takeda says approval will not significantly affect that forecast.
That sounds less dramatic than the approval headline.
That means regulatory success and near-term revenue differ.
What is the main launch risk?
Scheduling, access, uptake, safety, and competition all matter.
When did the official US approval filing arrive?
The SEC filing date was August 6th for the August 5th release.
So this is newer than the quarterly report?
Yes, it creates a fresh test after the Q1 baseline.
What is the bullish counterpoint?
But a new drug class can build value beyond one launch quarter.
Could that offset the weak US base later?
It could, but approval alone does not prove commercial demand.
What existing pressure is the launch trying to offset?
Generic erosion kept US constant currency revenue negative.
How is Takeda tracking against full-year revenue?
Q1 equals about 26.3% of the 4.64 trillion yen forecast.
Does that prove guidance is conservative?
Put simply, one quarter ignores product and seasonal timing.
What about the profit quality gap?
Reported margin was 16.5%. Core margin was about 29.4%.
That is a big spread.
About 12.9 points. So definitions matter before valuation.
Are you calling Takeda this episode's stock to watch?
Yes, as an analysis subject, not an investment recommendation.
State your editorial view clearly.
My view, pipeline quality improved before earnings quality did.
What should a US ADR holder watch next?
DEA timing, launch access, US CER revenue, and guidance.
What evidence would strengthen your view?
Positive US CER growth plus measured ORZEYFUL uptake.
And what would falsify the cautious view?
If US CER turns positive twice and guidance rises, I would revise.
What would make you more cautious instead?
A delayed launch or another underlying US decline.
Give me the answer in one sentence.
ORZEYFUL validates Takeda's pipeline, not yet its US growth.
So the 10% headline is not the investment conclusion?
Correct. Watch constant currency and launch execution together.